not try and trivialize the use of something that can be a constructive economic force. And as a businessman, he understood that. I mean, having worked with a number of presidents in my lifetime, there was an understanding of economic policy, but it was more of a political understanding of economic policy. Trump has a businessman's understanding of economic policy. He understands how the businesses are affected by, the strong arm of the banking system, economic and felt the trauma of it when they were banking in during his early cases. So to him, it makes sense to bring the industry onshore, not just accept it, but to bring it onshore, institutionalize it, and all the pieces become part of our economic fabric. And 11 months into it now, it's already, we have as roots of the system, and it's not even possible.
Then he accepted Bitcoin and crypto in his campaign. That was thanks to you. Or said you were alluding to that when you found out that the event at Mar-a-Lago announced that. I remember when he heard about it.
The name of the company is
so you guys have a different company in Canada. So like in Europe, you're building it, and you also talking about translating Bitcoin to new legacy corporations. And so what kind of unique challenges do you face in Europe, and then how do you use your conference to help push that message?
Sure. I think as I've heard before on the panel, is the industry now is in this new phase we're in. We're all going to have differentiated business models, and every Bitcoin treasury is going to do sort of slightly different from the others. Some very different. And for us, indeed, the conference is an important component. Building the ecosystem, educating, bringing community together. Last month was a great high energy event. That was the core of what we're starting with. And we're strategically building out different businesses within the Bitcoin ecosystem, including, for instance, Bitcoin Netherlands Magazine as one of them. So for us, that's important. I think if you think about Europe broader, obviously the interesting MSCI discussion that's happening is that it's kind of become clear that having an operating business or some sort of business around it, as opposed to just holding Bitcoin, is becoming more and more important. And similar to here, what you're hearing, we're actually also building out a variety of initiatives on our side to do that.
Yeah, it's an interesting point because at Orange BTC we have an education company, but we kind of can use that to push our mission to accelerate Bitcoin adoption, kind of taking that education infrastructure and then building Bitcoin curriculum and courses and educational resources. But do you guys think there's an advantage to having an operating company that does kind of work into the Bitcoin ecosystem? You can kind of utilize that, or do you think it's beneficial to have a kind of diversified operating business that isn't tied to the Bitcoin, isn't tied to the Bitcoin treasury? How do you think about that?
So personally, I think it's the better model if you do have an operating business that brings income in. Because a lot of the legacy companies, we think about legacy companies, they will be smaller, potentially businesses and cash flow positive. If they start just accumulating, stacking sets basically on a corporate level, I think that's a good way for a lot of them to start. So and probably the education that you and others have been provided, it's maybe enough at this point for them to convince the owners of the business to start somewhere.
Yeah, so the Bitcoin Standard Treasury Company is really focused on building the kind of the Berkshire Hathaway of Bitcoin. So we are looking at it as we want to build a financial juggernaut, as basically a financial fortress, and really do Berkshire 2.0. And that means, if you look at Berkshire Hathaway, which has, rail company, has coal, has, power utilities, they're kind of vertically integrated across the traditional economy. We want to do that within the Bitcoin economy. So we want to have, not only an actively managed treasury, but also wholly owned subsidiaries within the Bitcoin ecosystem. Or that could be, down the road, that could be future payments companies, futures exchanges, all kinds of different things. And the idea being that we want to, we believe that you want to be fully on the Bitcoin standard, so we want to be generating return in Bitcoin. Our mission is to increase Bitcoin per share. Where we raised about roughly $5 billion. 30,000 Bitcoin on the balance sheet, another 1.5 billion in fiat that will be converted into Bitcoin. And we think that 17 years in is still super early. You're in a great position here to become kind of like a financial fortress of the future to really catalyze and fuse Bitcoin into the financial markets.
Yeah, I would say just add to that is, I think the really cool thing about Bitcoin treasuries is that it's a way for Bitcoin to be utilized, right? I mean, holding Bitcoin is great individually in wallets and everything, but it's sort of sitting there. And it's very important as digital gold, as a value accumulator, but it still stays passive. And what Bitcoin treasuries do, holding these on their balance sheet, is then they're able to utilize it in part of the financial system. Think about a traditional system, right? You have the first layer that we're thinking about is indeed building the infrastructure around it, and some of it is non-financial, it's financial. And then if you think about what Strategy is doing with all the different digital credit bonds that they're issuing, that's sort of a whole new market that's being opened. And after that, with a whole range of different yield maturities, different type of instruments, there's actual arbitrage can be done with it. So you're really creating the whole swaps market actually in a way. So we want to be part of that in our own way, and especially from the European side.
I think there's one really interesting thing there about the arbitrage, because if you think about Bitcoin today, I was just at the Milken conference Thursday and Friday, and if you look at kind of the development of the high yield market and the inefficiency there, and how it was not well understood and how it was not efficiently priced, and you were getting paid an extra 600 to 800 basis points over an extra 300 basis points of risk. I feel like that's where we are with Bitcoin. You have the Bitcoin treasuries that are paying 10% yields. It's because the markets don't understand the technology and what's happening. That won't last forever. I think it's basically like Bitcoin is kind of like in that same period as like the late 70s, early 80s of high yield debt, and eventually they'll be well understood, and those fees will come down. I think actually Bitcoin should trade inside of treasuries, right? It's probably ultimately a better asset, but obviously very mispriced right now.
Yeah, I actually recently read Predator's Ball.
Classic.
Yeah, and so I saw so many similarities between the growth of that market and then looking at like the Bitcoin-backed securities market, and, the digital credit market that Michael Saylor has pioneered. Does the Bitcoin Standard Treasury Company, I mean, you guys have your own preferred, so obviously you're kind of going that route as well, so that's part of the Berkshire mission that you guys are going with.
Yes. So first off, anybody in the audience that hasn't read Predator's Ball, go get Predator's Ball. It's an entertaining read, and it will also give you a great roadmap for how the high yield market evolved. And I think we're seeing a lot of these similarities with what's happening with Bitcoin credit. And then you can go get Glenn Yago's book on junk bonds, which will really give you the deep dive. But yes, so Bitcoin Standard Treasury Company, we have a convertible bond that was a 1% coupon up, I think it was 30 or 35 on the conversion. We have the preferred equity, which was a 7% coupon that was priced at a discount. And then we did 350 million on that deal in the US. We did 500 plus on the convert. And then we have about 400 in common equity. So we want to have it fully, we want to have access to the full capital stack. And so when we're looking at, what we're going to do next, we're actually exploring the idea of issuing debt and preferreds in Switzerland, in Japan, other markets. We want to be a global player on that space. And then in terms of why come to Bitcoin Standard Treasury, if you're a portfolio company, well, part of that is the access to cheap capital. So if you are a private Bitcoin company and you're paying, somewhere between 7 to 12% or 7 to 14% to borrow money, you come over to Bitcoin Standard Treasury Company, and our cost of capital is 1% on converts, 7 on preferreds. Yeah. Very much cheaper capital, access to cheaper capital.
Yeah, I've thought about this in like the Cantillon effect. That's Bitcoiners are getting closer to the money printer, especially large corporations can get better terms on the debt. It's basically they're taking it and they're turning around and buying an asset that's appreciating at 30% a year. But let's talk about some of the challenges, because if you're a legacy CFO and you recommend this, you buy some Bitcoin, and then Bitcoin tanks 30%, and then you got to go to the board. How would you justify your decision to a board, that you made the right decision even though Bitcoin's down 30% since you bought it?
Well, my problem is I can't answer the question. We were all Bitcoiners who founded the company, so we knew what we were getting into.
Nice.
But there's one interesting thing you just mentioned. Yeah, in a world run by central banks, you want to be as close to the printing press as possible, and ideally also at the same time as close to hard money as possible. So I think the Michael Saylor strategy makes a lot of sense. It's like a pincer attack. So for us, Bitcoin was the silent investor that we otherwise would not have had, and it allowed us to scale the company. We did like 100 million over the last 3 years every year, returning revenue and bootstrap from zero. So it's the hard money itself has some kind of almost magic magnetic effect that it attracts more sound and hard money, and I think you can't go wrong as a legacy company if you start somewhere with Bitcoin.
I'd say the most important thing is really having an aligned shareholder base, right? Whether you're in a private stage, which we're currently sitting waiting for a listing to be approved, or public. So for instance, in my round, we buy Bitcoin with it. We have 1111 Bitcoin. And obviously Bitcoin is down since when we closed our round, but no one has ever called, oh, we're down 20%, right? So it's very important to have the right investors and have a long-term vision. But also the public company is the same, right? You need to go through the ups and downs together, and hopefully it's more ups and downs. But very important to have the board aligned, shareholders aligned, and the management team.
Yeah, I would just echo what King said. I mean, I think if you look at the Berkshire Hathaway and the investor base and the lack of turnover in that investor base, I think something like 90% of the shareholders have owned the stock more than 5 years. I think if you can have an alignment with the investors, that's the magic ingredient.
I think that's like a function of like transparency, education, investor relations, which is something that Saylor kind of set the bar, but down the entire industry is very, very transparent, in terms of what we're doing, in terms of capital raising, which I think is really important to get that alignment. And so let's talk about maybe start with you, King. It's just, at what point does not having a Bitcoin treasury become a competitive disadvantage? And maybe we're already there, but we're looking at corporate adoption. We're at the tip of the iceberg. I mean, we're talking about hundreds of companies. There's thousands and thousands of companies that all suffer from the same problem that haven't woken up to this yet. And so, at what point does not having a Bitcoin strategy become a competitive disadvantage? And we'll maybe go down the road.
Yeah, sure. If you think about the classic adoption curve, right? We're at roughly 3% adoption now, so still very, very early, as we always say, on Bitcoin adoption. If you think about internet adoption or social media, it took sort of almost 20 years, I guess, to get from maybe 10 to go from 3 to 100%. I think everything we've seen in our spaces goes incredibly fast, right? The development, the fact that having a new asset class with almost 2 trillion, it's only 17 years old, is insane if you think about it. So, having said that, I think I would count on this increasing very rapidly from here on. We've started, in the last few years, really increasing the Bitcoin treasuries, and for that spillover to go from, hey, I'm a normal company, I would put my cash in treasury bonds or something as a money market product, I'm doing it with Bitcoin, and move forward. I would give it a couple of years for that to really start increasing.
Yeah, I also think it'll be a few years out before it's a problem not to have Bitcoin exposure. We've seen a couple of folks bring these shareholder votes for Microsoft and others, and you're really not getting the adoption yet. You're not getting the pushback yet from shareholders on it. So maybe that might come from an activist investor, right, at some point, and maybe that would be kind of the canary in the coal mine for when it's going to start to become a problem not to have exposure to Bitcoin.
So I personally, I think by next year, and towards the end of next year, and I think what's happening in the digital realm with software engineering, with the advent of AI, I think the next step is autonomous AI. I really truly believe that, and autonomous AI will be economically active right away, and the more hard assets you have, digital assets you have, and in particular set up your business in a way that AI can transact and interact with your business, whatever legacy business it is, the more you would benefit. And I think that curve is going to be extremely fast, probably faster than what we saw with the adoption of Bitcoin in general. And I think if you were early in that, you will benefit in a compounding fashion.
Yeah, I love to paraphrase safety. Like, you can't protect yourself from another corporation holding a harder asset than you, and I think it's already a huge competitive advantage because they're all holding melting ice cubes. All right, so I appreciate every one of you guys. I think the beauty of this is that we all drive demand for the underlying, and we all help each other's business actually through that way. So appreciate everyone that you're building in each of your jurisdictions, and it's a pleasure to talk with you today. So thank you.
Thank you.
All right, thank you guys so much. Great conversation. Give it up one more time for our panel. All right, we are at the final panel of the day. So please help me welcome to the stage our panelists, Dylan LeClaire, Tracy Horace Lopez, and our good friend, Rohan. Let me get the, there we go. Irani, that's right, I knew it. Rohan and I are just getting to know each other. He's building a phenomenal product called BitcoinQuant.com. If you have not checked it out, I would definitely encourage you to do that. Well, guys, we're at the final stage here, home stretch. Thanks for sticking around. We are talking about scarcity and the implications of corporations continuing to buy Bitcoin, continuing to buy more Bitcoin than is being mined. And this is going to be a bullish, quick panel. Get people out of here with some hopium. Dylan, I want to start with you. What are you seeing on the ground in terms of accumulation versus price action? I know it's the million-dollar question. I know we can't, predict what happens next, but we've seen obviously a pullback in the treasury market. We've seen stocks being hit. What's kind of your read overall on where we're at?
Yeah, well, I think the treasury companies were, probably the biggest, driver of demand in the last year. My thoughts on it are sort of that, and I've seen other people sort of say this, that the treasury companies are sort of like volatility shock absorbers for the Bitcoin market. And so, you saw Bitcoin's, 20-30% from the highs, but a lot of the treasury companies much more than that. And the sort of the valuations relative to the Bitcoin holdings and NAVs are sort of that oscillator of demand in a way. And so, my thoughts on it are sort of that the MNAVs are sort of like what we saw with like futures funding rates, or like kind of the previous market cycles, like premium or discount to NAV. That's sort of a driver in itself, right? And so there's sort of a reflexive component where the market's strong, the corporation's stock price is strong, and it's driving further there.
To chips. And this is what foreign direct investment is. It's like a reversal of the IMF model. The IMF has been subordinating the Middle East historically. China's built their own initiative that's been rebuilding, and the Gulf countries are using the sovereign wealth funds. And so you've got the purchasing of assets in America at the same time as the GCC and America both being energy and gas exporters. And so really, this is the leverage that I believe the FIC has been pushing, and why we're getting this, MIC proxy Israel and the instability campaigns coming towards net. What I think we're seeing from here is the proof of weapons network, if they could get their way, they'd go through 3 cycles, which is the military, the MIC in basically manufactures instability. But now the FIC
You were and you are and you will be.
Excellent control. I see an axis. What do you think?
I asked her, but she feels.
Feel the way. First of all,
Okay.
picture. Then next I will finish the next. Wow. Our COO is here. This is our COO. Yeah. Yes. Do you have Twitter? Do you have Twitter? No? Instagram? Oh, do you have Instagram? Oh, Twitter, right? What is it? She's also good.
Take time?
Yes, I want to scan this one. First, shoot the photo. It's not the photo, then go back.
What the problem?
Already right. Yeah, to here is attach photo.
Finish this?
This to keep your money on it.
I cannot keep the dollar. I keep my seed place.
Yeah.
Y los de afiliados.
Thank you.
This is
What is
also my Hash House logo socks.
Ah, okay.
Yeah,
Yeah.
one of
That's all? Or this one?
We are out of it. This is for display.
Ah, okay. Thank you.
Do you have? Okay, are you in the light right now? Do you have a maybe a LinkedIn or an envelope that you can follow?
More of a roll. Good, good, good.
Idea from yeah?
What do you use? 20 gram? What's that? What's up? What's that? Can I give you that?
For interview. Once you are getting the interview,
Actually, no.
It's hard to do.
It's different than. Go to store and then create
We've been talking to a couple of people. We've been talking to Natalia.
This is quiet.
Tribes. Yes. So this one, we are building this mining farm. This is the box. This inside the computers. So this one for the cooling system. So like we are supplied for this equipment and construction. It's different size. There's no computer maybe this one like
Yours is here.
Created to honor the Genesis block because the Genesis moment where he created some money. So he's a proud owner now. We appreciate everyone who joined the movement and come forward to our booth.
Blonded? Start building businesses. People start
making groups are that's
sao mới nghe luôn.
Mensen, staat in de
Did you get about